Hello, welcome to this webcast. My name is Lucrezia Reichlin and I am a trustee of the IFRS Foundation. As many of you are aware, the trustees announced at COP26 the creation of a new standard setting board, the International Sustainability Standard Board, the ISSB, which will operate alongside the IASB, the International Accounting Standard Board, within the Foundation governance structure. Today, with colleagues from the Technical Readiness Working Group, we will take you through some of the preparatory work that has been done to provide the new ISSB with recommendations for a running start and the strategic implications of these deliverables. I will start by covering the background and context to the formation of the Technical Readiness Working Group before I will introduce today's speakers. The speakers will go into more detail on the working group's work, covering the recommendations and strategic implications for the architecture of the ISSB standards, the recently published General Requirements Prototype and Climate Prototype, and an overview of the working group's 5 other deliverables. But let me first take a step back. The process that led to the creation of the ISSB started with a public consultation in September 2020. The feedback to this consultation showed a clear demand for a global standards for companies' sustainability-related disclosure to meet investors' needs and a broad support for the Foundation to play a role in developing such standards. The message was clear and loud. There are too many sustainability standards, often inconsistent, and the lack of comparability and assurability may have led to greenwashing. So, the feedback said there is a need of consolidation, and the IFRS, given its experience and credibility as a standard setter, and given its governance, including the public sector oversight that its governance has, should play a leading role. Also, the message was climate standards are the most urgent priority. Informed by this feedback, the trustees decided to conduct further work on the creation of a new board as a possible response to this demand. In March 2021, we set out the broad strategic direction for a future ISSB. And there are 4 strategic directions I want to describe today. The first one is a focus on meeting investors' information needs to assess enterprise value. That is to focus on expected value creation for investors in the short, medium, and long term. Enterprise value is also the focus of the IASB, which issue capital market standards and provide a global language to describe financial performance. So this alignment is important because financial and sustainability-related financial information already overlaps and will only get closer over time. Notice that focusing on enterprise values imply disclosing how companies are affected by climate change, but also how they affect the environment, since the two are related. The second strategic direction is the need to build on existing work in this space. We did not want to start from scratch and adding to what was already there. So our aim from the start was to work towards a process of consolidation of existing standards together with the TCFD, the Value Reporting Foundation, the CDSB, and the World Economic Forum. This process of consolidation involved both content and organizational issues. The IFRS was encouraged by global regulators, multilateral financial institutions, the IOSCO, the security regulators, and the Financial Stability Board, to be the consolidator, given the experience as the global standard setter for more than 140 jurisdictions on financial account, its governance, and its due process, as we said before. A bottom-up approach would have not succeeded, but success was not going to be possible without the experience that the various sustainability standard setters had already accumulated. At the end, This new board, the ISSB, was born as a combination of a bottom-up with a top-down approach. The third strategic direction was the need to establish a global baseline. So a single set of high quality and globally applicable standards, which is important to enable investors to have a common information around the globe. These global standards can then be incorporated in national frameworks, and countries will have the flexibility to impose extra requirements if the public policy in place demands. A principle of proportionality can also be applied to emerging markets. The four strategic directions is start with climate, but then expand quickly into other environmental, social, and governance matters. In other words, climate first, but not climate only. Let me now just talk about the Technical Readiness Working Group. To operationalize the main consideration for an ISSB, the trustees established several working groups, one of which was the Technical Readiness Working Group. The purpose of the working group's technical work was to provide recommendations to the new board, providing it, if you want, with a running start. This was critical due to the urgent demand for global sustainability related standards. So the idea was just to have the new board already, prepare, given some work to which we could start with. So this webcast will provide a detailed summary of the working group recommendation resulting from 6 months of work. To summarize, the Technical Readiness Working Group work has been threefold. First, has provided the technical recommendations for the ISSB to consider, in particular the development of a general requirements prototype and a climate prototype that my colleagues will describe shortly. Second, the consolidation of existing sustainability reporting initiatives, which culminated in our announcement at COP26 of the consolidation with the Value Reporting Foundation and the Climate Disclosure Standards Board. And third, providing a strategic input for the definition of priorities in standard setting. Before we go into detail on the composition of the Technical Readiness Working Group and its recommendations, it is important to note that this work is not a substitute for following the due process, and robust due process is an important element of the established reputation of the IFRS Foundation as a standard setter. So the Technical Readiness Working Group's work has been conducted to provide the best possible recommendation for consideration by the ISSB. But any proposal for the new standards by the ISSB will be subject to public consultation to enable all those with an interest to share their views in line with the Foundation's existing due process procedures. The composition of the third Technical Readiness Working Group. So what is the composition? The members consisted of organizations that have already done a huge amount of work to help meet investors' information needs. They were, in alphabetic order, the Climate Disclosure Standard Board, the IFRS Foundation's International Accounting Standard Boards, the Task Force on Climate-Related Financial Disclosure created by the Financial Stability Board, the Value Reporting Foundation, which consists of the former Sustainability Accounting Standard Board and the International Integrated Reporting Council, and the World Economic Forum. In addition, IOSCO and the International Public Sector Accounting Standard Board were observers to the working group. For the last half year, this group dedicated a significant amount of time and resource to enable the ISSB to have a solid base with well-considered recommendations on which to start its work. Members have brought experience and insight, enabling, as per the trustees' strategic considerations, work to build on past initiative and consolidate a standard-setting environment with many different standard setters. The content of the existing sustainability reporting initiatives complement each other well. Leveraging this has enabled the creation of a solid basis of recommendations for future standards. Before my colleagues take over to explain the technical recommendations in more depth, I will introduce our speakers and the topics they will cover. Veronica Poole, Global IFRS and Corporate Reporting Leader at Deloitte, who represented the voice of the World Economic Forum on the Technical Readiness Working Group, and Brian Easterly, Chief Technical Officer for the ISSB Standards and the Value Reporting Foundation, will be taking us through the architecture of standards and future recommendations of the ISSB. Ravi Abeyardana, Technical Director of the Climate Disclosure Standard Boards, will be taking us through the general requirement prototypes. Spencer Powell, Performance Lead at the Impact Management Project, will be taking us through the climate prototype. The IFRS Foundation trustees would like to thank the speakers, their colleagues and organization for the support provided to the Technical Readiness Working Group. We start with the architecture of standard. I will pass over now to Veronica and Brian to discuss.
Thank you, Lucrezia. Our first deep dive is on the architecture of standards. There are two aspects that architecture needs to address: the design for the future system of the IFRS Sustainability Disclosure Standards. In other words, what does a complete set of standards look like? And the design for individual standards. The working group recommends that a complete set of the ISSB standards should comprise three core elements: an overarching standard that sets out general disclosure requirements, thematic standards that cover sustainability topics that are pervasive across companies and industries, and industry disclosure requirements. The Technical Readiness Working Group recommends that each individual standard should cover the four core aspects of how a business is run: governance, strategy, risk management, and metrics and targets. The Technical Readiness Working Group has set out its thinking on the overarching general disclosure requirements on sustainability topics in the General Disclosure Requirements prototype. This includes the thinking on some of the key concepts like materiality, reporting boundary, reporting channel, and frequency. The prototype includes a general requirement for entities to report on all material sustainability topics. And as I mentioned a moment ago, they will need to report across four aspects of governance, strategy, risk management, and metrics and targets. So this means that from day one, even in the absence of the other ISSB standards, entities would have to follow a high-level framework for disclosing information about all sustainability topics that are material to them. Thematic standards set out the disclosure requirements for sustainability topics that have pervasive impacts on enterprise value across entities regardless of their industry. Climate is one example where a thematic standard is required. But there will be other areas, such as diversity and inclusion, and other social topics and environmental themes like biodiversity. Thematic standards, therefore, will incorporate cross-industry metrics. The World Economic Forum Stakeholder Capitalism Metrics Project identified 21 core metrics applicable across industry. This work has been incorporated into the thinking of the Technical Readiness Working Group and is being passed on to the ISSB. Thematic standards are intended to result in consistent and comparable disclosures from all entities on a given theme relevant to investors and other participants in the world capitals markets. Industry standards establish sustainability disclosure topics relevant to enterprise value for specific industries and include narrative and metric-based disclosure requirements for each of these industry-specific disclosure topics. These standards are designed to facilitate comparability between entities within a given industry. This structure is similar to and modeled after the ISSB industry standards. Industry-specific information has been flagged as critical by both IOSCO and investors in their response to the IFRS Foundation Trustees consultation paper that was issued in 2020. So once we have the full set of standards, a preparer would have to comply with the general requirements and thematic standards in full, would also select industry-specific standards that reflect the portfolio of activities within its business model. And that will be a complete set of standards. Now, I hand over to Brian, who will talk about the architecture during the transition phase.
Thank you very much, Veronica. Now I'll speak to transition phase architecture. The working group separately has acknowledged that because the ISSB is a new board with no existing IFRS sustainability disclosure standards, a transition phase is required. This phase is designed to advance the ISSB's work from day one to the mature state outlined in which a comprehensive set of IFRS sustainability disclosure standards is in place. The recommended architecture in the transition phase is built upon principles to enable the ISSB to achieve a mature state. This includes building on existing frameworks and standards, standard-setting activities conducted through an effective transition phase design, and project prioritization. The transition phase includes the following recommended steps for the ISSB. First, prioritization of the review and assessment of the general requirements and climate prototypes developed by the TRWG with the objective of issuing exposure drafts as soon as possible. Second, inclusion of a comprehensive set of climate-related industry metrics in the climate standard exposure draft. These industry metrics would be sourced from the SASB standards. Next, finalization of the general disclosure requirements and climate standards. In the case of the climate standard, this will involve finalizing both the thematic standard and the supporting industry-specific metrics, potentially as two separate work streams. Last, incorporation of the SASB standards as part of the available ISSB materials to facilitate the use of hierarchy requirements by a preparer. Robbie will talk about hierarchy later, but it is worth briefly saying that in the absence of an ISSB standard, management will need to refer to other standard-setting bodies. And that is why the ISSB incorporating SASB standards and other materials in an early phase is important. While I focused on transition phase architecture in this segment, it is important to note that there will be other priorities for the ISSB in its early days, some of which we'll discuss later, such as an agenda consultation and conceptual framework, among other areas. Let me now hand it over to Ravi, who will talk about the general requirements prototype in more detail.
Thanks, Veronica and Brian. The objective of the general requirements prototype is to require any corporate entity to provide all material information about their exposure to sustainability-related risks and opportunities that is useful to users of general purpose financial reporting. This would include investors, lenders, and other creditors seeking information on sustainability matters that have a bearing on an assessment of enterprise value. This prototype is inspired by IAS 1, the presentation of financial statements, the CDSB framework, and the integrated reporting framework. It also seeks to enhance connectivity within the entity's general purpose financial reporting, including between the entity's financial statements and sustainability-related financial information, via sustainability-related financial disclosure as set out by the prototype. To facilitate a consistent approach for the disclosure of information about significant sustainability-related risks and opportunities, the information to be disclosed is required to cover 4 aspects: governance, strategy, risk management, and metrics and targets. This is consistent with the TCFD's recommended content pillars. The general requirements prototype includes requirements on the application of important core concepts to assist preparers in preparing sustainability-related financial information, such as materiality in the context of sustainability-related financial disclosures, reporting boundary, reporting channel, and frequency of reporting, the qualitative characteristics of decision-useful sustainability-related financial information. I will now go into some of the conceptual elements in more detail. Materiality. Under the prototype, what preparers must report is guided by consideration of materiality. So first things first, how does the prototype define what is material? The definition is very much aligned with the concept under the IFRS financial statements. It states that sustainability-related financial information is material if omitting, misstating, or obscuring that information could reasonably be expected to influence decisions that the primary users of general purpose financial reports make on the basis of those reports. This is based on and aligned with the IFRS approach on materiality in relation to financial reporting. So materiality is entity specific and focuses on what constitutes relevant information for making investment decisions regarding the entity. This definition is focused on information that could influence a user's assessment of the entity's enterprise value, including its ability to generate cash flows over the short, medium, and long term, and the value attributed by users to those cash flows. Such information could include, but is not limited to, information about 1. An entity's impact on society and the environment, if those impacts could reasonably be expected to affect an entity's future cash flows, and 2. Events considered to have a low likelihood but a high potential impact on the entity's future cash flows. In summary, this definition of materiality allows the consideration and potential inclusion of any sustainability issue, which an investor in that entity might reasonably consider as material. Connectivity within the general purpose financial report. Another important concept is connectivity. In this context, this refers to connectivity of information within the general purpose financial report that includes financial statements and sustainability related financial information. A complete set of sustainability related financial disclosures should enable users to understand the connections, dependencies, and trade-offs that may apply between sustainability related financial disclosures and other information in the general purpose financial reporting. Reporting boundary. The general requirements prototype explains that the reporting entity's boundary for both its general purpose financial reporting is the same for its financial statements and sustainability related financial disclosures. The ISSB's conceptual framework defines the reporting entity, and the general requirements prototype leverages this. An entity shall disclose material information about significant sustainability-related risks and opportunities arising from activities, interactions, and relationships with parties outside the reporting entity's boundary that affect users' assessment of enterprise value. For example, a reporting entity's principal supplier may use a manufacturing process that will need to be substantially modified to comply with environmental regulations. The reporting entity may determine that information about sustainability risks and opportunities to do with this supplier is material to the users of its general purpose financial report. Hierarchy. The prototype provides a hierarchy for the application of disclosure standards in order to enable entities to provide all material sustainability-related information even before the ISSB has established its suite of standards. The entity will apply all relevant IFRS sustainability disclosure standards first. The general requirements prototype sets out that in the absence of an IFRS standard that applies specifically to a sustainability matter, particularly during the transition phase, management may refer to the most recent pronouncements of other standard-setting bodies and frameworks, such as IASB standards, TCFD recommendations, both the CDSB and the Integrated Reporting Framework, along with their associated materials, or the World Economic Forum stakeholder capitalism metrics. Reporting channel. Turning to the reporting channel, there are various possible locations in an entity's general purpose financial reporting in which to disclose sustainability related financial information. It could be included in an entity's management commentary, where management commentary forms part of an entity's general purpose financial reporting, or it could be included by cross-reference from another report that is available to users on the same terms and at the same time as financial statements. Or it could also be available in the financial statements or in another part of the general purpose financial report. Flexibility and reporting channel is included in the general requirements prototype to allow for different regulations and reporting practices that may apply in jurisdictions. Defining the general requirements. As highlighted, an entity shall disclose information related to sustainability-related risks and opportunities that focuses on matters critical to the way an entity operates, namely governance, strategy, risk management, and metrics and targets. This reflects the proposed architecture of standards and has been structured to allow for connectivity of information. Governance covers the governance processes, controls, and procedures in reporting entity users to monitor sustainability-related risks and opportunities. Strategy covers the sustainability-related risks and opportunities that could enhance the entity's business model and strategy over the short, medium, and long term. Risk management covers how sustainability-related risks are identified, assessed, managed, and mitigated, and metrics and targets covers information used to manage and monitor the entity's performance in relation to sustainability-related risks and opportunities over time, which covers both cross-industry and industry-based metrics, for example. I will now pass over to Spencer, who is going to speak about the climate prototype.
Thanks, Ravi. The climate prototype sets out the Technical Readiness Working Group's recommendations for the ISSB on a climate standard. The working group started with a climate-specific prototype in view of the priorities set out by the Trustees of the IFRS Foundation, which is for the new ISSB to first focus its efforts on climate-related standards before working on other sustainability matters. This commitment was based on the urgent need and calls from users of general purpose financial reports for better information about climate-related matters. Users explicitly stated they wanted more complete, consistent, comparable, and verifiable information to help them assess how climate-related matters affect an entity's financial position and performance, its future cash flows, the timing and uncertainty of future cash flows over the short, medium, or long term, and how the entity is responding to climate-related risks and opportunities through its strategy and business model. The climate prototype builds on many years of work by the working group's member organizations and others. Most notably, it evolved from a seminal effort published in December 2020 by a group of 5 standard setters and framework providers. Those are CDP, the CDSB, the Global Reporting Initiative, or GRI, and the IARC and the ISSB, now known as the Value Reporting Foundation. They co-authored a report to show how their complementary frameworks, standards, and platforms, building on the TCFD recommendations, could be used together to provide a running start for the development of global sustainability standards. The Technical Readiness Working Group further refined this prototype and benefited from further engagement with a technical experts group established by IOSCO. The proposed disclosure requirements cover governance, strategy, risk management, and metrics and targets, in line with the TCFD recommendations. Each are important for investors. On the next slide, we will illustrate here the requirements with a couple of examples in regards to the requirements for strategy and metrics. So for strategy, the prototype strategy requirements focus on 5 elements of a reporting entity's strategy about climate that should be disclosed. The first, with respect to risks and opportunities. The significant climate-related risks and opportunities that the entity reasonably expects could enhance, threaten, or change its business model, strategy, and cash flows over the short, medium, or long term. These risks and opportunities can be both current and anticipated, where the latter refers to risks and opportunities in future periods. The second, business model impact, which is the impact of current and anticipated climate-related risks and opportunities on its business model. Third, the strategy impact, so the impact of those climate-related risks and opportunities on management's strategy and how that inputs into management's decision-making. Fourth, financial impact, the impact of those risks and opportunities on its financial position, financial performance, and cash flows at the reporting period end, and the anticipated effects over the short, medium, and long term. And finally, fifth, impact on resilience. The resilience of the entity's strategy to significant climate-related risks and the entity's analysis. This involves disclosure about how the entity conducted scenario or other analysis to determine resilience, the results of such analysis, and how an entity's financial position and performance supports its strategy and business model resilience over the short, medium, and long term. Now, it's important to note that where effects given are anticipated, by which we mean forward-looking, if they are provided as a monetary amount, they can be expressed as a single amount or a range. Now, finally, in terms of metrics, in the prototype, the disclosure objective for this section is an entity is required to disclose metrics that enable users to understand the entity's performance in managing significant climate-related risks and opportunities. To achieve this objective, the prototype requires disclosure of both cross-industry and industry-based metrics and the associated targets set by management. Now, first, if we look at the cross-industry metrics, these are intended to enhance comparability across reporting in 7 key areas that provide essential building blocks to assess climate-related risks and opportunities. These are greenhouse gas emissions, which include scope 1, 2, and 3, vulnerability to transition risks, vulnerability to physical risks, proportion of climate-related opportunities, capital deployment devoted to climate-related risks and opportunities, level and use of internal carbon prices, and finally, remuneration around climate-related considerations. Detailed technical protocol for the cross-industry metrics will be needed to ensure consistency and comparability in terms of measurement across reporting entities for some of the cross-industry metric categories. The climate prototype also proposes that industry-based metrics and activity metrics based on the SASB standards, along with technical protocols that provide guidance on definitions, scope, implementation, compilation, and presentation are also required. Now, an industry-based metric is relevant to entities within an industry, where an industry is defined through common features of business models within that industry, and the manner in which the underlying business activities comprising those business models results in exposure to specific risks or opportunities. In the case of the climate prototype, it's in relation to climate-related risks or opportunities. Now, if we move on to the relationship between cross-industry and industry-based metrics, the climate prototype lays out the relationship, which is that all reporting entities are expected to disclose the cross-industry metrics and the relevant industry and activity metrics applicable to their business model. In some cases, the use of metrics from multiple industry categories might be required to meet the disclosure requirements when an entity's business spans a range of activities. Some of the cross-industry categories may also have a related industry-based metric that requires a specific level of granularity or focus for that industry. For example, greenhouse gas emissions for particular industries may require breakouts by type of GHG, or for example, in the oil and gas industry, percentage of scope 1 emissions from flared hydrocarbons. Furthermore, specific denominators for calculating emissions intensity may be required for certain industries in order to meet the information needs of investors. I will now pass back to Brian and Veronica to provide an overview of the remaining deliverables.
Thanks, Spencer. In addition to the 3 deliverables already explained, the architecture of standards, the general requirements prototype, and climate prototype, the Technical Readiness Working Group provided recommendations to the ISSB in a further 5 areas. We will now provide a brief overview of those. First, conceptual guidelines. It will be important for the ISSB to have a conceptual framework to inform and underpin its standard-setting activities. Technical Readiness Working Group has taken the IASB's conceptual framework as the starting point and considered adaptations that are relevant to sustainability standard setting. These, of course, are preliminary thoughts at this stage, and no doubt the ISSB will work to develop this thinking further. However, it is worth noting that the conceptual framework is an area where it will be essential for the ISSB to work together with the IASB to ensure coherence and connectivity. Conceptual frameworks play an important role in the standard setting process. They allow the development of standards to be based on consistent objectives and concepts. A conceptual framework is not a standard in its own right, and it does not override requirements of any specific standards. However, it is useful not only in guiding the standard setting process, but also in supporting consistent reporting practices, particularly where there are no applicable standards. Concepts that are included in a conceptual framework are generally further developed in specific standards. For example, the concept of materiality is introduced in the IASB's conceptual framework and is then further elaborated on in IS1, presentation of financial statements, to provide a specific contextual definition and application guidance. There are many common concepts for financial and sustainability reporting. Importantly, they include a common primary user and objective, materiality, and characteristics of decision-useful information. However, certain adaptations will be necessary for sustainability reporting, or further elaborations may be needed. So, for example, an adaptation is required to include reporting on enterprise value relevant matters that sit outside the direct reporting boundary, like Scope 3 emissions. And further elaboration may be needed to explain how to apply short, medium, and long-term time horizons in the context of sustainability information. The second deliverable focuses on other items to inform a standard-setting agenda, or in other words, recommendations on the ISSB's work plan based on the expertise of the members of the Technical Readiness Working Group. The Technical Readiness Working Group recommends that the ISSB should consult on its agenda, suggesting that a number of projects should be prioritized. These include the General Disclosure Requirements Standard, the Climate Standard, Taxonomy, and Conceptual Guidelines, which have already been progressed as separate recommendations by the Working Group. In addition, the Technical Readiness Working Group recommends that the ISSB should consider and get feedback on a number of projects for thematic standards, such as human capital, diversity and inclusion, water, biodiversity and ecosystems, and human rights, and a number of projects on industry-specific standards. Recognizing the need for connectivity in the standard setting process between the work of the ISSB and that of the IASB, that should ultimately lead to connectivity in the requirements of the standards, the Technical Readiness Working Group recommended that the ISSB should suggest some common projects to be progressed jointly with the IASB. This could include joint work on climate-related risks, pollutant pricing mechanisms, intangible assets, and of course, management commentary. Let me now pass on to Brian to talk about the due process recommendations for the ISSB standard setting process.
Thank you again, Veronica. Now I'll speak on due process characteristics. The objective of the due process characteristics deliverable is to provide recommendations that could inform ISSB's due process for both the transition phase of the ISSB and ultimate mature state, meaning once a suite of standards are in place. Recommendations by the Technical Readiness Working Group, as seen on the slide, include building upon the existing IFRS Foundation due process principles of transparency, full and fair consultation, and accountability. They also note that the ISSB should consider the due process of the existing organizations in their standard setting work, the need for adaptability in the transitory phase, whilst ensuring the balance with timeliness and quality. As part of this work, the Technical Readiness Working Group has conducted a mapping exercise comparing due process of the members of the technical group to inform the Trustees' Due Process Oversight Committee. Next, on digitization. The digitization deliverable has the objective to provide recommendations for consideration for the ISSB's digital financial reporting strategy and stakeholder digital experience. Digitization is regarded as a critical for the ISSB work. This deliverable includes two components. First, digital financial reporting strategy, providing high-level recommendations for a potential ISSB digital financial reporting strategy, interfacing with the IASB's work, and providing recommendations for a potential ISSB taxonomy, including how best to build it, having reviewed the climate prototype. Next, digital experience, providing recommendations for consideration for a potential ISSB strategy on stakeholder digital experience and enabling technologies to support that strategy. This involves taking stock of the Technical Readiness Working Group members' existing digital offerings in terms of their delivery of standards with the outside world and the technology that supports it. Next, on connectivity. Stakeholders have repeatedly raised the importance of making sure there is connectivity between standards set by the new board with standards set by the IASB to create a package of information that is useful to investors. For example, given both boards will focus on meeting investors' information needs, it is important that the standards they create are compatible and complementary, and that they work as a package for investors too. The Technical Readiness Working Group's recommendations for connectivity cover governance and constitutional arrangements, operational matters such as how the technical staff working with the two boards would be organized, what the scope of the IASB's work should be relative to the ISSB, how the two boards should work together when a project is of interest to both boards, for example, on intangibles, how the reporting required by the IASB and the ISSB should be connected. For example, considering next steps on the IASB's management commentary project. Ultimately, it's crucial that the IASB and ISSB establish connectivity on these multiple different levels to ensure that the boards are not conducting the work in silos, but rather are collaborating where appropriate to best meet the information needs of investors. This connectivity in operations should lead to connectivity in standards, that the need for which has been emphasized by stakeholders in their responses to the IFRS Foundation's consultation. In other words, connectivity in the output. Now let me hand it back to Lucrezia to conclude. Thank you.
Before I wrap up, let me say a couple of words about our next immediate priorities. We expect to make an announcement soon about the appointment of the chair and vice chair of the ISSB, as well commence the search of the other board members. The ISSB leadership will then decide if they want to publish proposed standards based on the Technical Readiness Working Group's recommendations relatively instantly before other board members are appointed, or rather wait until the full board is in place. We expect the first public consultation to include a proposed climate disclosure standard and a proposed general disclosure standard. Until then, it's worth looking at the prototypes. They give a clear indication of direction. It is also important to highlight that feedback on the proposed standards will be discussed by the ISSB in public before standards are finalized. If you want to keep up to date with the progress and announcement of the ISSB, you can register to receive alerts on the IFRS Foundation's website. Thank you for watching.